Hi, everybody. This is Jen Berbas with the Berbas Group in Austin, Texas, coming to you with the May newsletter numbers, basically the April real estate market numbers. So before we jump into the numbers, we want to remind you that if you have friends or family that need help with real estate outside of the Austin area, just let us know. This last week, we had a past client ask us if we could find his sister, an agent that works like we do in LA, and we did. So just let us know if your family needs help. We're happy to do what we can to find you somebody that's give them the same level of service we would give them if they were in town. I'm going to jump into a chart that I like that's a little bit different than the charts that are in the newsletter. This is data that we collect internally on the team. We like to look within 12 miles of downtown because we think this subset of the market works just a little bit differently, moves a little differently than the rest of the market. Top line is the active homes that are on the market. The second line are the homes that are going under contract, so the pending homes, and the bottom line are the closed sales. You can see that this last week on May 7th, we jumped up to 1929, just using this one metric, right, within 12 miles downtown. 1929 homes on the market, which is higher than both peaks that we saw last year in the number of active homes in the same area. So more homes on the market. It's important for sellers to price correctly and to prepare their homes well, present it well, good photos, good staging, things of that nature. And we're noticing that the pending homes are not quite up to the point they were last year. And now this is a subset of the market, and you're going to see that same pattern in the broader metro area. Okay, so we're going to show you the broader metro area charts in a second for the pending homes, and you're going to also notice that those are a little bit lower than they were last year. We firmly believe that pricing has stabilized and that as soon as inflation comes off just a tiny bit and interest rates can back off, we should see a recovery in this pricing. We are looking for jobs data to shift. We think that's going to be the first light at the end of the tunnel for us. Noticing that the average price is going up, right? 603 here, the average price for the metro area, which is great. This is the data I was talking about. So this is pending homes. Look at 2019 versus 2023 and 2024. We're a little bit lower in 2024 than we were last year, which was consistent with the smaller subset that we were looking at, because don't forget, this is the broader market area. And then in 2019, we were 30% higher in the number of homes going under contract. So to me, that says like once we get back to whatever normal is, pre-COVID normal, the market should be about 20 or 30% more active than it is here. That's kind of what we're hoping. Again, the theme of the day is a lot more homes on the market, a lot more inventory than last year. In the metro area, 5,200 homes on the market, 28% increase from last year. I like this chart because there's a saying that says buyers live in their payment. Buyers pay a little bit less attention to pricing than one would think. They really pay attention to what their payment is. And interest rates are so high right now, that's really what's impacted pricing. And so you can see that the monthly payment here, that blue line, has gone up as interest rates go up. Again, this is that year-over-year data on the pending homes, and we can see it is going down. I'm going to go back to this for a second. So there is math that basically holds true at every price point. If interest rates go up 1%, we do expect the pricing on homes to come down 10%. So it's a 1% interest rate to 10% on the home price correlation, and it's an inverse correlation. And this is at any price point. Now, you don't necessarily see this move in lockstep because there are so many other variables that impact market, supply, demand, other economic factors, and inflation. However, we can expect that there will be an increase in pricing when interest rates come down. And that's why I think you're seeing, especially what we're seeing is that a lot of locals in the Austin area are deciding to go ahead and buy that house that feels like it's on sale to them, even though interest rates are high, because they've always been looking for a house in Northwest Hills, or they've always been looking for a house in Bolden. So now they see the opportunity and the prices have come off. They think that, well, I'll go ahead and purchase this and I can refinance later. There's a lot of local lending groups that are actually offering refinancing at no cost in the next year to buyers that purchase now. So it's a really good opportunity for people that want to lock in that price now and then know that they can lower their payment with a refinance later. Anyway, always happy to help. If you have any questions about your area or about your submarket, your neighborhood, give us a call.